Hey everyone, this is Vishal from Uncharted FX, and before we begin, if you do like my videos and enjoy the content that I post, please like the video and also subscribe if you haven't already done so. So I want to talk about what's the safest way to make money in this potential gold bull market. I mean, we've been talking about gold for quite some time. I've given my thoughts on why it's likely going up due to, not just real rates yielding low or even negative, but I think there is a confidence crisis issue that's going to be happening or coming. And that's historically when gold does well. And now, yes, some people will argue, no, it's actually the inflation aspect, because generally during periods of a confidence crisis, we do see inflation. So it is that whole chicken or the and the egg argument. But you can see here gold broke above this 1350 level that we were all watching. Very important level. Again, was resistance about like 6 times. Had a nice break. And on the daily, we potentially could have our first higher low here. I have this line here because remember, we need a close above previous highs to actually confirm a higher low. It'd probably be up here at 1430, but we are well above 1400 now, which is quite amazing. It's a good move here. And I just want to talk about a couple of gold stocks, and again, what's the safest way to perhaps make money in the gold sector. So I'm not going to talk about the GLD ETF. I think everyone knows the ETF GLD. There's a whole bunch of other, I believe, smaller other ETFs too that basically track the gold bullion or the gold markets, SLV being the one for silver. That's, I think, pretty obvious, and so is trading the actual futures. However, I want to talk about some of the mining stocks, because that's where, we will probably see a lot of gains. And also why I think we'll see more gains in the mining stocks is because you got to realize money that is in the markets, managed money, they can't just stay into cash. They have to be in something to manage money. They're getting paid for their performance. And I think, that money is going to go into cheap sectors or cheap assets. And I think the mining sector is quite cheap in terms of some of the stocks that are out there compared to, everything else. And I can see a big rush of money into the mining sector, even as gold goes up, and we see this confidence crisis. So let's talk first about a couple of ETFs here that I follow. Then we'll look at juniors and mining companies, and then we'll talk about the safest way, and that is royalty companies. So GDX, if you've followed the gold markets, GDX and GDXJ is generally what people look at to see how mining stocks are doing. GDX being mid to small cap producers, while GDXJ is the junior gold miners. And people generally follow this to get a gauge on how the markets are doing. So you can see nice uptrend so far in the short term here. So we are in an uptrend, about to hit some resistance levels here, flip zone. So this is generally what people watch. So it's something that you should probably incorporate to your charts. So let's talk about the miners. So I'm not going to talk much about the miners, because the thing about mining is you got to realize it's not a great industry, a lot of costs, especially if oil goes up as well. Then you have fuel costs, a lot of margins. It's not a great business. So if you look at these balance sheets for a lot of these big major miners, there's they have a lot of debt, so that's a big issue. However, the play for mining is that a lot of these guys haven't been spending money. When I mean the big companies, I mean like, Goldcore, Newmont, etc. A lot of these guys haven't been spending money for exploration, and they are likely going to be, having to buy up smaller companies that have been doing exploration. So that's the whole thesis for that, and that's where you get your juniors, your smaller companies. If you go to sort of like CEO.ca, so why don't I just do that just for the sake of it? But if you go here to CEO.ca, which is a Canadian site, and you know, a lot of these junior miners are on the Canadian TSX, Toronto Stock Exchange. So if you go here, you know, you have a big list, plenty of more other stocks, but a lot of these guys are small, you know, trading under $1, and a lot of them, you know, aren't producers, but they're sitting on an asset, they're developing an asset, they're drilling to try to create a resource, and their hopes are that if they do that work and have a really good resource, one of these big majors will like what they see and will buy them up because of that resource. So, you know, for that, there is a lot of risk. You know, you got to think about jurisdiction. Is it sort of a gamble? Because, you know, if you don't really understand the veins in terms of geology, how can you properly assess what can be hidden under the ground? So there is a lot of, like, you know, luck, I guess, involved. But what I do is I generally trade them more using my strategy rather than holding them as long-term investments. I don't think juniors are really investments, they're more speculation. So there's a difference between speculating and investments, and yeah, a lot of these are speculations, right? However, you know, you can learn to read geology charts and diagrams, read how to look at resources and stuff. But I think, you know, the jurisdiction is very important. You know, if it's somewhere, say in like BC, Canada, where we have like the NDP party, which is very strict on environmental regulations and stuff, maybe not the best idea. However, if it's in, say, like Yukon territories here in Canada, or maybe even like Ontario or Quebec, where the laws are more productive for mining, then, you know, it's a decent bet. If there's other big mining companies nearby, for example, in the Yukon, there's a lot of mines, so there might be some big company nearby one of these guys. So, you know, it makes sense. You know, if you're right next to us, we might as well buy you out if you have a good resource, because it's much more easier. So things like that take into account, and I'm not really talking about it too much, but there's also something called the, where are they here? I'll look for a company if I can find one. But they're called prospect generators. And essentially what these guys do is, you know, they basically do the same thing where, Mirasol's one as well, where essentially they, okay, so this is just the, chat here. Message board. But what these prospect generators do as well is they look for partners and joint ventures with other companies where they try to make this resource and then you know, pass that resource on to a big major, right? So essentially they're doing the prospecting, they're doing the research. And the good thing about, you know, a prospect generator is that they generally have many projects. So there's a you know, bigger flow projects, and they're focused on different countries and jurisdictions. So that's something you can look into. I think prospect generators are probably a better bet than some of these juniors. But again, you know, it still is, in my point, a speculation. The safest bet, however, you know, because mining goes up and down, and depending on the price, a lot of these miner producers aren't making, you know, money, or very small amount. However, you know, once gold is over 1400, which we currently are, it's not really an issue. But, you know, I'm just saying, if gold ever does fluctuate lower, there's still large costs, because these guys, these big miners, they employ a lot of people, and you know, there's a lot of costs, right? So the smart way to play it is actually by buying gold royalty and streamers. So what are streamers? So it's a metal stream is a purchase agreement that provides, in exchange for an upfront deposit payment, the right to purchase all or a portion of one or more metals produced from a mine at a price determined for the life of the transaction by the purchase agreement. Metal stream acquisitions are often larger in size than royalty acquisitions, have more flexibility in the negotiation of terms and conditions, and generally provide both parties with tax advantages. The creation of precious metal streams on base metal mines offer additional opportunities, in this case we're looking at Royal Gold, to add precious metal revenue to its portfolio beyond seeking royalties on mines that produce primary precious metals. So they give here an example of, you know, how, you know, this company, Royal Gold, acquired 35% of the payable gold and 18.75% of the payable copper from this copper gold mine. So you can take a look at this. What is a royalty? A royalty is the right to receive a percentage of other denomination or other denomination of mineral production from a mining operation. So most of Royal Gold's royalties are based on production generated from a mine. For example, 2% gross royalty value on a mine that produces 100,000 ounces of gold annually would generate payments having a value of nearly 2,000 ounces of gold per year at a price of $1,600 per ounce. That would result in a royalty stream to us of nearly $3.2 million per year. So what is the benefits of a streaming and royalty company? Very simple. They don't have as much costs as large mining companies, because some of them don't even employ very many people. I think it's a Cisco that employs like 25 people or something. So a lot of these companies don't employ too many people. All they're doing is they're taking risk generally by they look for projects that are about to go online, about to produce and pour, and also they'll fund them, and in that way, when they do fund them, they'll generally come up with some sort of agreement or stream or royalty where, okay, once you're in production, which we've helped you do, we have a right for some profit. So as you can see here, very good, because the royalty company and streaming company isn't actually paying too much in terms of costs, right? It doesn't have all these all in sustaining costs. It doesn't have too much employees. It doesn't have to pay for fuel, all that kind of stuff. And the good thing about royalty and streamers, or even when the markets, when gold and silver go in a bear market or they start falling, these royalty and streaming companies they're still making money, because they still have a royalty or a stream on that mine which is producing, because that mine, they just can't stop producing. They're going to keep producing. So these guys will still make money, and even if gold and silver do go in a downturn, these guys will still be able to put money down to acquire royalty and stream. So there's always a news flow that will keep the stock price interesting, right? So this is why this is probably the safest way. Essentially, you're minimizing the risk, because these guys are profitable. First of all, they don't have very many costs, and they can even do things during a bear market or a downturn in the metal prices. So let's look at like the big five. Franco-Nevada is huge, right? I think they're the largest. Not only is it gold and silver, but I believe they also currently did oil. I believe they went into oil too currently. But here you go. So, when you go to the site, you can see, what their assets are. Franco-Nevada have probably quite a lot. Here we go. So these are all the mines. Wow. So, these are the guys. Yeah. So they are doing oil as well. But again, this is just amazing, right? All this, all these mining companies, all these mines that are owned by mining companies, pay out a royalty or a stream to Franco-Nevada. So you're getting all this, profits in your share price as well. And if you look at Franco-Nevada, we're going to look at the financials. We're not going to look at the charts, because this is more of an investment, talk. Just look at this. So this is what you really want to see on income statements. You want to see your gross profit obviously positive. You want to see your operating income positive, and you want to see your net income positive. And you want it this way, where your gross profit is large, and then your operating income is second to large, and then this net income from continuing ops is lower than the operating income. So when you have this type of structure here, very good. And you can calculate the margins too by taking this price, dividing it by that, and then you get your percentage. Same thing with net income, taking this price, dividing it from that. So if you want to look at your operating margins and your net income margins, that's the way you do it in terms of percentage wise. But you can see there's a bit more. Of course, their operating income went a bit lower, but then there's a bit more detective work you'd have to do. But this is still a healthy company, in my opinion. Just look at this, right? So something like this is why these royalty companies are doing well. You can even see, even in years silver and gold were going down, they were still making profits. So that's Franco-Nevada. We talked already about Royal Gold. So again, let's maybe see what they have. Again, here are their producers. So again, these are the ones where they're getting their money from mines that are produced, and again, development and evaluation and exploration. But in terms of development, they fund these companies, and then when these companies eventually do go online, there'll be a royalty or stream from them, right? So that's basically the model. You can see here a portfolio of 41 producing and 15 development stage royalties. Again, if we go to their financials, oh, okay. So like in terms of Royal Gold, maybe their financials aren't the best actually, because they aren't making operating income, and their net income is also negative as well. However, this could be due to some other oh yeah, look at that. Okay, so their earnings aren't the best. Again, you know, I'm just looking at the numbers. You probably have to do some more of your detective work, but it could be due to where they spent their money. So can we see here? No, their generation. So their administrative costs stayed the same. So again, yeah, you probably have to dig up and do some more detective work. I'm just doing this on the moment here. Just had some of these companies out, so I thought I would share them with you. Wheaton Precious Metals is also one of the world's largest precious metals streaming companies. They used to be called Silver Wheaton, but now they're a bit more gold focused as well. So I think that's hence why they changed the name. So again, here, stream. You can see these are some of the mines and streams. So let's take a look also at their balance sheet. So again, you know, still nice. However, I don't really like the net income larger than the operating income. But, you know, they're still making good earnings. So, you know, something like this at 31 is still quite, you know, we're not going to talk about if they're undervalued or overvalued. But this is just ways to show you that these companies are profitable even in the downturns. So Cisco Gold is another company. I think these next ones are going to be a bit more lower priced. Franco also, most of these are both on the Canadian markets and the Toronto Stock Exchange. I believe Royal Gold is only on the American markets. Yeah, I believe so. Yeah, and then Wheaton is in both Toronto and New York. So is a Cisco, but again, a Cisco is a bit, I think the Cisco and the next companies that we're going to look at are a bit cheaper than these other companies that we looked at. Wheaton was what, 30? Yeah, 31. So a Cisco is going to be, so first of all, here we go. We can see their asset portfolio. Oh, there we go. Cisco is $10 on the New York Stock Exchange, $13.50 on the Toronto Stock Exchange. So this is something, you know, that is still developing and growing. Here's their asset map. This is all the money they're making from these producing royalties, development. So these are the ones that they're waiting for them to go online. A little bit exploration. Oh, that's another thing I should have mentioned, but there's also base metal opportunities. So if you're not only into gold and silver, copper, zinc, iron, all that kind of stuff, right? So that's something, you know, of course, you'd want to delve into a bit deeper when you look at these companies. Let's look at a Cisco here. Okay, so again, operating income at a loss, net income also at a loss. So again, you know, something like this, you probably want to dig a bit deeper until you do this, but I want to show you that this is essentially what you're looking for when I look at, you know, it doesn't have to be mining companies. It can really be any company's income statements where a company is, you know, making money. So this is like the ideal setup. Franco-Nevada is just like, you know, like I said, it is the blue chip, right? This is generally, if you're going to just put money away for the long term, you have a lot of money, you'd probably put it in Franco-Nevada. Again, it's not an investment advice or anything, right? But just saying that's what Franco-Nevada generally is. Sandstorm, so another one, 100 royalty assets in a single investment. Again, you can look at their royalties here. Let's see, so with over 185 royalties acquired since 2009. So these guys have been quite active. And then they have a list here of their producing and their development. So here's their producing. Again, you know, if you're into this in the industry, you'll you'll hear some of these names here. You can buy shares of these companies by themselves, or you might as well buy the royalty, just because, again, the costs, right? A lot of these companies have costs for the gold, all it's sustaining. They have to pay for their large number of employees and oil, fuel costs, and all that kind of stuff. Whereas these royalty guys, don't really have those costs. So here we go, something like this. Again, I like Sandstone Gold. This is the type of balance sheet I like to see. So something like this, especially this year, is an opportunity that I will look at. I will look at Sandstorm Gold using my strategy when to get in. Again, investment. This would be not a trade for me. This would probably be something I would invest money in for the longer term. The next ones here that I'm going to talk about are a bit smaller. I'm only showing Mavericks here because you'll see why. But this is an emerging precious metal royalty company. And if you look at their assets, here's all their assets. But essentially, the reason why I'm a bit more interested in Mavericks is they also have a pretty decent balance sheet, showing earnings. And this is, what I see. This is healthy. So this is sort of what I like to see. And, relatively still under $10, right? So it's relatively still a new company. But something like this is, for the long term, I can see some growth. Of course, you'd want to see where they're putting their money, what other assets they're looking to get into and stuff. But, Mavericks, as I said, something that definitely caught my attention. These other ones are much smaller. So there's Abitibi royalties. Again, something like this is they're not profitable, right? So something that's not really what I want to see. EMX royalty, again, look at the loss, but they have net income and stuff. Something like this is just, I don't really want to comment on what I think is happening with some of these companies, but it is the mining industry. There's a lot of promoters and pumps out there, and I'm pretty sure you can figure out the rest. And then Metalla, so again, very low priced, however, still not making positive earnings. So something like this, maybe, you could watch for the longer term. But this is just I wanted to give you a list of some of these royalty companies. There are only a few anyways, so I just wanted to give you a list of some of these companies that you should definitely keep an eye on, and probably, like I said, is the safest way to make money in this next gold bull market. And again, I mean safe. I don't mean speculations. Of course, if you're speculating in the juniors, one or a few of them can definitely go move up 10 times or 20 times. But again, a lot of work to do when you're speculating and deciding to purchase these large amount of shares at a smaller price. But these royalty and streamers are quite safe, and again, consistent in profits, and even do well when there is a downturn in the gold and silver price.